Hi everyone, welcome to Emergence 2025 Investment Conference here at Four Seasons Hotel in Sydney. So we're joined here today by Pratik Kala, Portfolio Manager and Head of Research at Apollo Crypto. And he's also one of our panelists at Crypto Investment Trends here at the event. So welcome.
Thank you.
Okay.
Good to be here.
Yeah, thanks. And also, first, with your extensive background across traditional capital markets and crypto, what key lessons from traditional finance do you believe are most valuable when applied to crypto investing?
Yeah, it's a great question because traditional finance and crypto are completely different asset classes. So traditional finance, you're typically used to cash flows, your PE ratios, your PF ratios, your DCF models. None of that stuff exists in crypto. So a lot of people say, okay, what have you transposed from traditional finance into crypto? And I say, actually, aside from probably risk management, not much, because this is a completely new and different asset class that requires a unique set of lens. I actually think investors would fail if they try to apply the traditional finance lens and use it to invest in crypto because it doesn't work. So crypto by nature is obviously decentralized. When it's decentralized, it uses its own currency. That's by design. It's not something that was just created out of thin air. It's the nature of the network. As I say that each blockchain network has its own currency. Think of it like Australia having its own currency, the UK having its own currency, UK, British pound, Japanese yen. So blockchains are a little bit like that as well. And it needs its own currency to actually basically function. And there are economics behind the currency that you cannot really apply like PE, PF, traditional finance ratios to. So what we look at is completely unique, looking at it from a completely unique perspective by looking at the network activity. So it's like the economy and the heartbeat of a economy. So here in Australia, you can measure the entire GDP, the amount of activity that is going on in the economy, the amount of transactions, the population growth. I mean, you can sort of transpose that on blockchains and see which ones are actually winning, which ones are accelerating, which ones are declining, and that's what we sort of try to bring with a unique lens.
It's actually a great insight, especially for those who want to venture into crypto investing. And also, you presided over some of Australia's best performing funds in 2023. And what investment strategies proved most successful during that period, and have those strategies evolved for 2025?
Yeah, absolutely. The strategies evolve very frequently, actually. They would have to because crypto is so volatile and the dynamics change so quickly. In the past, we had a very hostile government, very hostile SEC, very hostile regulatory environment. So it was probably more on a defensive sort of way. Defensive sort of names were probably what did well in the past under that regime. Right now, after Trump and a very pro-crypto White House and Senate, and basically the overall environment around crypto with the AI and crypto czar David Sachs, now we can take on a little bit more risk because we think that the returns are going to be up and to the right across certain verticals. So the strategies actually change quite frequently, but with Trump, of course, certain sectors we see are going to do really well. We think DeFi, decentralized finance, is a clear winner. We think anything around stablecoins and blockchains that can help it, help stablecoins transact, whether it's Ethereum, whether it's Solana, whether it's something else, they will do really well. And we think tokenization is actually going to do really well as well. So they will typically happen on chains outside of Bitcoin. So a lot of people just talk about Bitcoin, but Bitcoin cannot support any of these things. They will typically happen on Ethereum or a layer 2 or Solana or one of the other chains. And we've got a good view and pulse on which one is going to be able to capture that market over the next few years.
Thanks for sharing more about the crypto investment trends right now in 2025. Really interesting. But how about the fund strategies that Apollo Crypto has? So Apollo Crypto offers several distinct fund strategies, from your frontier fund to your market neutral approach. How do you determine which crypto assets belong in each portfolio, especially when evaluating early stage projects?
Yep. So we have three strategies. One is the Apollo Crypto Fund. It's an Australian fund, so any Aussie investor can invest in it. It is Bitcoin, Ethereum, and a range of alternate coins. So you get access to the broader crypto exposure using that. So that's Fund 1. Our second offering is called the Frontier Fund, so Apollo Crypto Frontier Fund. The Frontier Fund, as its name says, is effectively everything outside of Bitcoin and Ethereum, so frontier tech within blockchains. These are names such as Solana, such as Maker, such as Near, such as Hyperliquid. Some of these names which are like on the frontier and pushing the boundaries of crypto. So this is the second fund. This is a directional fund, so we take long sort of approach based on sectors and thesis that we have. And the third fund is very unique. It's the world's first fully on-chain delta neutral fund. So it's effectively a risk-free fund where we harvest the yield in blockchain. Typically, in traditional finance markets, there's a cash and carry basis trade. The yield is slightly above risk-free rate, but in crypto, you can sort of get about 16 to 22% risk-free per year, just because it's nascent. So that fund is about harvesting the yield and passing it on to our investors in a risk-free way. So one of the funds is in Australia, and there's a BVI fund and a Cayman fund as well. So plenty of options for investors to come in.
Awesome. And looking specifically at 2025, which segments within the crypto ecosystem do you believe offer the strongest investment opportunities? Is it DeFi, AI infrastructure, layer one protocols, or something entirely different?
I think it's going to be a combination of layer one and DeFi. DeFi has been something I've been passionate about for a long time. I worked in traditional banking for a decade, and the amount of friction and waste that happens over there because of incumbent IT ecosystems, systems from the 1980s that were patched and hacked and put together with a lot of clunky things around them, along with huge armies of middle and back office staff, just to make all of this stuff work causes a lot of friction. I think DeFi just makes everything so much more simpler because it's real-time transfers and real-time settlements. I mentioned this on a panel today. Like, we can send videos and text messages in real time in 5 seconds across the globe. We can't do that with financial products, and the goal in the next 5-10 years is to have tokenization and DeFi make that like frictionless to do across the global world very easily. And the second thing I'm probably bullish on is anything around stablecoins. So stablecoins is step one, and then securitization of other assets, bringing them on chain, and real world assets are probably number two. And to service this is layer one protocols. So it's either going to be Ethereum, or it's layer twos, or Solana, or one of the other protocols that is going to be able to provide the returns there as it hosts these tokenized assets.
Okay, fantastic. And lastly, we want to know your experience here at Emergence 2025. How has been your experience so far?
Yeah, it's been fantastic. I met a lot of exhibitors. I met a few investors. It was great being on the panel. The vibe is good and the setup is great. So thanks for putting this event. It's been fantastic.
Awesome. Okay, thank you so much, Pratik, for granting us this interview. And to all our viewers, thank you for watching. And I look forward to seeing you in my next interviews.